I'd like to extend a very warm welcome to everyone who's joined us online for this session of Henley Partners' 15th Annual Global Citizenship Conference. My name's Juliette Foster, and the title of today's webinar is The Robust Expansion of Investment Migration in the 2020s, a Resounding Success Story. But it's fair to say that one of the most remarkable consequences of the global pandemic has been how it has rapidly reshuffled so many aspects of the world in countless ways. A theme that's emerged very strongly is our innate human desire and indeed need to move, and that in turn was highlighted by our collective inability to do so during the Great Lockdown. And this need for mobility has led to a huge boom in the investment migration industry. How much of a boom? Well, let's find out, because I'm delighted to say that I'm joined on the panel to discuss this trend by Juerg Steffen. Now, he's the Chief Executive Officer of Henley Partners. We're also joined by Greg Lindsay, who's Director of Applied Research at NewCities, and Nirbhay Handa, who's Group Head of Business Development at Henley Partners. So, gentlemen, welcome and thank you so much for being with us. And Juerg, let me start first with you, because look, it's fair to say that you are a leading figure in the investment migration industry. You've had tremendous experience. You've seen quite a few trends in the time that you've been here. So what has been going on? What are the most notable shifts that you've witnessed since the 2020s? What are they?
Thank you very much, Juliette. So indeed, you know, our industry is growing very fast, but this not only since COVID-19, it was before growing. I remember when I joined around 10 years ago, only Henley Partners, I think, was 1/3 of the company that we are today. And what changed now during COVID in the last 2 years? So before we had mainly clients from emerging markets. So these were people who, mainly entrepreneurs, I would say, around 85% entrepreneurs or wealthy individuals. And they wanted to move to other parts of the world with their families, to have a better place for their families to live and also for their children to go to school too. And this changed a lot, because now we see also from the developed markets, we see a lot of applicants. And I would say it's now even around 50-50. And why is this the case? This is the big question. We, of course, ask our clients from North America, UK, and other developed markets, and they say, you know, the situation is that before COVID, we didn't even realize that it could be a risk for us to have only one citizenship or only one residence. But during COVID, we saw that the countries and the regions in the world are handling the COVID crisis very differently. And we wanted, because we have the financial means, you know, we wanted to move somewhere else, to Australia or New Zealand or perhaps even the Caribbean. But we just couldn't, because we just have this one residence and one citizenship. And so these clients from the developed markets, they realize now that it is a kind of insurance policy to have more than one residence and citizenship. And so generally, I would say, when you look at the industry, it was a kind of a niche industry. Before, it was not really part of wealth planning. And this changed now a lot. When I did my master in financial planning a few years back, I remember that we never really discussed residence and citizenship planning. We discussed, of course, how you can optimize your wealth, how you invest properly, don't put all your eggs in one basket, these theories. But never actually our professors started to talk about moving somewhere as a mean of wealth planning and as a mean to optimize and perhaps diversify your current situation. And this changed now a lot. When I look at the universities, that this residence and citizenship planning is part of wealth planning, and the universities realized that and also took it into their lessons. Then what other trends we see? So In the past, we had mainly a client who came to us and explained to us his or her situation, and then we had a solution for them, a residence or a citizenship program somewhere in the world that fits their situation, that fits their needs. And now what we see, the big difference is that actually a lot of clients, they don't want just one residence or one citizenship, but they apply at the same time for different options. And this is also a clear reason because of COVID-19, because they say, you know, you don't know how things develop. You don't know whether COVID, whether such a crisis, a health crisis comes again. And then we want to have the flexibility to not only move to Europe or to Asia, but perhaps also to Africa or to the Caribbean. And therefore, they apply now to for more than one program. And the same, we see another clear trend we see is that clients are coming back. In the past, they came to us and did a program, but now they see that more and more programs are coming up, and they also realize how important it is to have options. And so these, I think, are two very important trends that we see now because of this COVID-19 pandemic.
Yeah, and it is fascinating to see how the pandemic really shaped or reshaped the sector, taking it to another level. But Nirbhay, within that, you can't avoid the profile of the upwardly mobile citizen who's trying to get that additional residence and citizenship. If you had to draw up that profile, what is it? And are certain nationalities perhaps showing more interest in this? And if so, are there specific programs that they're applying for?
Juliet, thank you for the question. Yeah, absolutely. I think just adding to what Juerg said, there has been a drastic shift in the overall investment migration landscape. You know, historically, most of the investment migration was centered around the US, the Australia, Canada, and people physically actually wanted to move to these places, right? The US EB-5 was really popular. But now the concept of investment migration is being looked at as a resilience as a service. People are going for these residency and citizenships program because they're keen to build resilience in this volatile macro environment, right? So what we see is we have entrepreneurs who are embracing the whole idea of deurbanization that's taking place worldwide. We've got companies like Apple and Microsoft promoting remote working. So we have people who are location independent. So we get a lot of interest from these entrepreneurs to start with. Moving forward, we have ultra high net worth families who are, really sort of getting to understand the concept of wealth preservation, right? They're planning, hey, how I'm going to manage my wealth over the next 20 to 40 years. How do I ensure there's longevity to this hard work that I've done throughout my career, right? And they are looking at, hey, maybe we should look outwards. Maybe we should look at places where they have a tenacious banking infrastructure like Zurich or Singapore, right? Emerging and developing markets, they're great places to create wealth, but they're not necessarily great places to preserve wealth, right? And as a result of that, these families are looking outwards. For example, private banking in emerging and developing markets, particularly like Indonesia or Philippines, is probably a 15-year-old concept. It's not proven its resilience as yet, right? So these families are looking at investment migration from a wealth preservation point of view, right? And finally, the nature of the business that we're in, any uncertainty around the world, whether that's the unrest in Hong Kong or whether that's the elections in the US, our inquiries tend to increase. So we've seen a fair share of inquiries, particularly from the US. And as Juerg mentioned, historically, our client base was wealthy families in emerging markets who wanted to transcend beyond the restrictions that they have due to the nature of their citizenship. But now our clients are also in the developed world. But for them, this is more of a resilience plan, right? So that's also what we see a lot. In terms of the key programs, obviously the European citizenship by investment programs have been really popular, right? Malta as a jurisdiction has been highly sought after, where you could naturalize into a European citizen over a span of 18 months, right? For example, we had a Filipino family. They decided they would acquire a Maltese citizenship, right? Now the family is based in Switzerland. One of their child is studying in Sweden for free because he's an EU citizen. The other one's an engineer in Berlin. And all of that has happened because now they have an EU citizenship, right? In the wake of Brexit, we've had a lot of British nationals embracing the idea of getting a foothold in the European Union. whether that's getting a residency in Portugal, or that's possibly looking at an alternative citizenship in Malta, right? What we see is jurisdictions that allow dual citizenship. We see a lot of interest around citizenship by investment programs, but jurisdictions that don't allow dual citizenship, for the likes of India and Indonesia, we see more interest around residence by investment programs. So that's another trend that we see. We've had a lot of tech entrepreneurs in places like Sri Lanka, Bangladesh, and these are really high caliber entrepreneurs, right? And we've had a lot of interest around this visa called the Australian Global Talent Independent Visa, which is meant for these high caliber tech entrepreneurs who can actually use the infrastructure Australia has to raise investments and take their businesses global. So a lot of these tech entrepreneurs globally, and particularly from the emerging and developing markets, they've really started embracing these global talent independent visas, which are being offered, right? And Australia has obviously been on the forefront of that. So that's another trend that we see. We see a lot of interest from Americans looking at alternative citizenship, right? And it could be possibly because they're keen to get something which is less invasive in the long run from their wealth structuring point of view. So whether that's a Caribbean citizenship that's quite benign or neutral, or that's a citizenship in Montenegro. So we see a lot of interest from Americans as well. Montenegro, again, is a slightly new entrant when it comes to citizenship by investment, but the program has been highly sought after. It has a very transparent legal and fiscal infrastructure, very conducive for entrepreneurs. So I would say these are a couple of programs where we see most interest, and usually the profile of our clients are now families in the developed world, families in the developing world. That doesn't really matter anymore. And I think they're looking at investment migration, not necessarily to move all the time, but to build resilience. So I think that's the change that we've seen.
And Greg, regardless of the program which individuals are choosing, the end product will be transformative. So for one moment, please wear your futurist hat, because I need you to tell me which countries looking forward will be new havens for talent in the coming years. And how's that going to feed into the post-global realignment? Because clearly COVID has forced many countries, their economies, to recalibrate.
No, thank you, Juliet. I mean, obviously there's big macro trends happening here, right? There's questions of demography. You know, obviously we've seen nations in the EU, the United States, Canada, having birth rates below replacement. Actually, birth rates fell during the pandemic. The baby boom that some hoped for early on failed to materialize. So we see these nations are needing workers from the global south, and to some extent or another, they're realizing it despite tensions within each of these countries about migration. So, you know, at some point, the winners of this are going to be the ones who begin to draft new programs, new visas, new regimes, to bring some of those talented workers in. And that's why I've been watching, if Henley Partners and investment migration began at the very top of the market, high net worth individuals like the Filipino family Nirbhay mentioned, the incredible opportunity that opened up to them. I've been really heartened what's happened during the pandemic, of course, with the nomad visas and some of the innovation elsewhere below, some of the low-cost alternatives that have begun to appear. For example, if I had to pick a nation that's going to be a winner out of this, I would look at Portugal. I mean, Portugal drafted some great policies to basically halt on deportations, to keep talent that was already there, grant them further rights. They've embraced the digital nomad movement. If you go to a site like Nomad List right now, for example, all of the top destinations, which are updated in real time, are Portuguese. And now consultancies have appeared, I suppose rivals to my colleagues here, but at the bottom end of the market, offering for just a few €100 to streamline processes to get residency, at least temporarily, for Portugal. So I think we're about to see the birth of a newly transformed industry here, where there will be low-cost alternatives, where nations that have woken up and realized, just as Nirbhay mentioned here, that that there are all sorts of workers on the move here. And so the signs that I'm looking at, the weak signals are, of course, I've talked a bit before about the fact that the Finns in Helsinki created a program to attract Silicon Valley talent, advertising their great schools and public transportation networks. The government of Denmark is advertising on Instagram that you can come to Copenhagen and reside there. The fact that the urban quality of life is now becoming this incredible amenity that they're realizing is going to be appealing to people who can work from anywhere. It's just now a question of unlocking it and getting them there. So I think the winners are going to be the ones who figure out that what a lot of these people want is access to these countries in various degrees and streamlining that process. Here in Canada, for example, I'm a recent resident myself, so it's always funny to me when I read from Nirbhay and others that that Canadians are trying to get out of here. I just got my way in. That we see students from across the global south apply to Canadian universities and take on heavy student debt from overseas because it's really about getting that permanent residency status. Canada and other nations would be very keen to realize, I think, that that they should simply remove these barriers and these workarounds and create new programs to allow that path to permanent residency, or at least temporary residency in the meantime. And we saw that the tourist-heavy markets in the Caribbean and others, Barbados and others, were the first to do this by creating what some have called temporary citizenship. These sort of longer-term stays. So anyway, I would look at the nations in Europe in particular. Malta has done this. Portugal led the way in this. Estonia and others that are really trying to pioneer these new forms of what the economist Branko Milanovic calls citizenship light. And so the winners will be those places that have good governance, good services they're willing to offer, and are able to design these programs that are able to sort of navigate the political tensions to bring in these talented workers, and yet win the global war for talent.
So it's an interesting vision that we heard just now in terms of the countries which are the ones to look at going forward and what other countries are doing now to board this train. But from your perspective, Juerg, what do you think this is going to do in terms of the evolution of the investment migration industry? In fact, what sort of an industry are we going to be talking about in the future?
It is clear to all of us that this COVID-19 pandemic disrupted the global economy. So inhabitants of many countries and mainly also the entrepreneurs in these countries are disappointed how the governments handled this crisis, this health and economic crisis. And therefore, they're looking clearly into alternatives. And on the other hand, the governments, they need revenue. They are discussing now tax changes to higher their taxes. Also in the US, you have now this discussion about the fair share. It is clear that a lot of billionaires in the US are actually not paying taxes, but this is, it was always like this. It's part of the tax system, but there are these discussions going on whether billionaires should be taxed additionally. And of course, all such discussions make the wealthy and the entrepreneurs in these countries to look at alternatives and to think, is this the right place where we are currently, where our companies are, where our staff are working, or do we have to look at alternatives? And so when you look at this residence and citizenship by investment industry, in the past, 10 years ago when I joined Henley Partners, it was more a kind of a luxury product. It was something nice to have, like you have a Porsche or a Ferrari or a nice home somewhere in the south to tell your friends. And a lot of people said, okay, now I also get another residence or citizenship. But this changed dramatically now because the industry became mainstream. Now it is essential to have options. It is essential to have another one or two residence and citizenship as a tool for wealth planning. And this, of course, the governments also see, because more and more countries now implement such resident by investment and citizenship by investment programs. And also from a government side, it becomes now mainstream. And we see since last year, since COVID, we have never seen as many governments actually who contact us and who ask for our help and our support because they would like to implement such programs as well. So the future, I think, looks very bright in our industry. And from that perspective, we will see in the coming year a very, very fast growth.
Well, if you take the concept of a portfolio, you diversify your portfolio, hedge, protect yourself against the buffers. And what we're seeing is how this in turn links in with investment migration. Let's take it to the next level. And I'm talking about domicile diversification. Can you explain that? Because that's one of those expressions that is being written about, and it's burned its way into the lexicon. We're talking about it a great deal. So what does it actually mean? How does it relate to this?
I think first and foremost, as the common sort of theme around this discussion has been, every day we hear about some form of crisis, whether that's military, it's economic, it's social, it's recently been healthcare. The importance of alternative residence, particularly in times like these, has been really emphasized, right? And now families are looking to pursue these options as a result of it, because it's a bit of a plan B, a means to sort of hedge your sovereign risk overall. And as a result of that, domicile diversification becomes a really relevant concept. So what that means is, let's say if you're a wealth manager, you would tell your client that, hey, a part of your portfolio should be in equities, a part of your portfolio should be in real estate, right? A part of your portfolio should be in government bonds. We go to our clients and we tell them, hey, you should have multiple residencies, or you should have multiple citizenships. You should de-risk yourself from just having all your assets in just one jurisdiction, right? So that's essentially, in essence, what domicile diversification is. And it's really crucial, particularly in times like these. For example, there have been discussions in the past where, US possibly there were conversations that they may lose their visa-free access to Schengen. What happens in that situation? But let's say if an American entrepreneur who's planned in advance, he already has a Caribbean citizenship, or he owns a second home in Portugal, he can seamlessly still access the European Union, the Schengen states, right? What happens if you are a globally minded entrepreneur based in a Southeast Asian country with a bit of a simmering crisis politically? You're really prone to visa bans. But let's say you already have a benign or neutral citizenship that you acquired. It can protect you in those situations. In 2016, it became very difficult for people from the subcontinent to acquire visas in UAE, right? And for a globally minded entrepreneur, this could really hinder and make a huge business impact in a fairly detrimental way, right? But if he had a Caribbean citizenship, for that matter, he could move seamlessly in and out of that place, right? Similarly, a bit of a serious discussion, but what if you're a bit of a minority in a jurisdiction and you don't know what the future holds for you, right? And that happens in a lot of countries, particularly across Asia, right? There has been a bit of a simmering crisis. So what you could do is you could acquire citizenship in a country that's politically stable, it's economically stable, and hedge against any kind of macro adversity that may come through because if you are a minority in that jurisdiction, right? Again, what if US or UK or Canada, they were to come up with policies in the future which are very invasive on the wealth preservation initiatives? But if you've planned in advance, and if you already have a citizenship in the Caribbean or in countries where they have certain set structures around resident non-domicile taxation or anything that's more conducive, particularly for your entrepreneurial ambitions, right? So this is where the concept of domicile diversification becomes really relevant. But on a separate note, families are also becoming very aware. They're really keen to understand what is the value of the investment they're making? What is the intrinsic value of it, right? In a metropolis like Jakarta, Mumbai, Manila, the real estate prices are exorbitant, right? In a place like Mumbai, real estate is more expensive than Manhattan, right? For 250,000 euros, you won't get much in Mumbai. But for the same amount of money, you could get a beautiful home in a place like Greece and also get a Schengen residency along with it. And I think this thought process has been really pivotal, driving interest around these programs, because people are seeing what is the intrinsic value of this investment, right? Why would you want to keep your wealth in a fund in an emerging or a developing country where you could keep the same money in a high-performing asset and also get a Schengen residency for your child, right? So it's become a very casual question, and it's really prompting a lot of interest around what we do. But on the other side, I think domicile diversification is a concept that government should really tap into, right? Because at the end of the day, we're going to reach a stage where countries are competing for entrepreneurs, and they're going to go to places which are politically stable, economically stable, and where they have a tenacious banking infrastructure for the longevity of the world, right? And countries who will have a structured residence by investment program or a structured citizenship by investment program, they're definitely going to have an edge over others.
And let me follow on that point with you, Greg, because look, you previously mentioned the need for governments to welcome foreign investment and skills, especially at this period of recalibration that we're seeing. But what do you think this is actually going to mean for global governance and also the challenge of attracting investors and talent? Because whilst that governance is good, there is a danger that perhaps if it's overzealous in its application, it may have the opposite effect. It could be a deterrent. So what is it that governments also need to do to make their countries attractive to investors and those highly skilled individuals, because they're going to need that money and that talent?
Climate change hovers over all of these conversations when it comes to resilience and domicile residence. But will the estimated 300,000 or so Hong Kongers with Canadian passports, will they finally choose to emigrate en masse? This is, to me, one of the big questions. And this is, of course, central to the UK strategy. This goes back to your whole governance question here as well about what nation states are doing. I mean, we've seen a post-Brexit UK is quickly triangulating with various nations, such as, for example, India and Iceland, expanding a sort of youth permit program there to allow more young workers in. I think we're going to see more almost migration alliances. So, for example, I think the signal event, the starter gun on sort of this next phase of where things are going was when Estonia introduced the e-residency program, I think in 2016. That was, of course, I have my digital identity card behind me here. That allowed me and the other 80,000 or so applicants to bank and do business within Estonia and therefore within the EU, even if we did not establish residency there. The next phase of that work, my understanding is that the Estonians are consulting for states in India, for the Mexican government and for others to basically either create or extend that digital architecture to include them, which imagines we could start to see digital archipelagos of perhaps not citizenship or even residency visas, but extended rights to do banking, to move wealth, to move around. And so I think part of that will be the sort of alliance networks that will happen. And, and we're seeing, that, some of the established players like the European Union are trying to crack down on this. I mean, we discussed Malta earlier. I mean, obviously the European Commission has sent very sternly worded letters to the Maltese to shut down this program because it feels that somehow Malta is pulling a fast one on them by allowing people to enter into the Schengen for this. So I think it'll be interesting to see which nationalities, which sort of alliance structures will be welcome to this and sort of create alliances to create more migration inward versus those trying to create a wall. And again, I mentioned Milanovic. He had a great saying recently, the 60-20-20 rule, which is that 60% of your outcome in life is your passport. 20% of it is, your hereditary status, and 20% of it is grit and luck. That ratio is skewed. And, again, I think we need to create more programs that will allow that 60% to decline. And that's why I'm very curious about the governments that are trying to extend these alliances and trying to create these new products. So it will be interesting. It will be interesting to figure out, how to govern in a way that will allow people to come in for even just periods of time to achieve opportunity and come out of there. Because if not, we're going to see more of what Nirbhay described there, which I love this notion of, wealthy members of the global South seeing Europe as a deal in which they can basically find their way in. So, how do we rationalize these flows, which are a bit skewed at the moment?
We're going to have to leave it there, but thank you all for your time and valuable contribution to this session of Henley & Partners 15th Annual Global Citizenship Conference. It really has been an excellent discussion, so much food for thought for all of us to consider. And a big thank you as well to our global online audience. We appreciate your interest and also engagement in the Global Citizenship Conference. And if you're interested in attending any upcoming webinars, you will be welcome. Please visit the events page at henleyglobal.com. That is henleyglobal.com. In the meantime, stay safe and goodbye.